Welcome, ladies and gentlemen, to Commodity TV and a new edition of our virtual interview series. Today we have for the first time Griffin Mining, China's almost largest zinc producer, and we have Roger Goodwin here with us, the financial director. Good morning to London. How are you doing, Roger?
Good morning. We are well. The sun is shining. Everything's looking good.
Super. Same here. Sun is shining too. That's great. Aside of COVID, everything is fine. That's right. Well, first of all, congratulations. I just heard that you have tomorrow your 25th anniversary with Griffin Mining.
With the company.
Jesus,
yes.
How did that
come?
That's really a long time. Great. And it's great to see that somebody is really that long with the company. So you are like from the beginning with the company, right? Almost from the very beginning. Yep. Yeah, super. And I also saw in your presentation and in some talkings, I heard that you only financed $20 million to bring this company live and into production. This is outstanding.
Absolutely. This company's been around, as I said, it's been around since about 1990. It's been listed on the London Stock Exchange since 1997. And in that period, we've only raised about $20 million. The last time we raised any money was in 2004, and that was very much to get our mine going at Beijing in China. And so we started production in 2005, and ever since then we've been just quietly increasing production. So we started by mining and processing around about 200,000 tons of ore per annum. This year we should do around 1 million tons of ore per annum. The processing plant at the Beijing can do well over 1.5 million tons of ore per annum, so that in the future we're all set to do at least 1.5 million tons of ore per annum out of Beijing. That has all been financed from internally generated cash. We've not had to go to the markets, and we are debt free.
Wow, fantastic. I mean, debt-free, this is, I'm from Stuttgart, I'm a Schwabe, so we don't like that. This is really fantastic.
I have to confess, I am old school, and I am with you on that one.
Exactly. Old school is the right wording for that. Absolutely. So the Beijing mine is in China. It's, I think, in the province of how do you say that? Hebei? Is that right?
In the Hebei province.
Hebei province,
which is
exactly
the area which surrounds Beijing. So one of the great things about this mine, it is very convenient. I can literally get from my house in London to the mine site in China in around 18 hours.
Wow.
Direct from London, motorways, freeways, all the way almost to our mine site. In fact, there is a road that actually goes over the mine.
Wow,
so it's incredibly convenient to get to, incredibly convenient to get any goods or services that are there. We operate all throughout the year. The temperatures there vary from around 30 degrees plus in the winter to about -30 during the winter, but we can operate during that period. Snowfall is not heavy there during the winter, so it's very, very rare that we cannot get to site for any reason.
Fantastic. So that you guys have an underground mine, right? And of course, as
correct, we have an underground mine. Yes.
You are producing a lot of zinc. Yeah. Any other metals you have as byproduct?
Yes, we do. In fact, probably between 20 and 25% of our revenues now come from gold and silver. We produce 2 concentrates. So we produce a zinc concentrate, which contains about 50% zinc and about 50% of muck, which we then sell to the smelters. More importantly, we actually produce a lead concentrate, which contains the gold and silver as well as some lead. And we are paid around about 85 to 90% of the value of that gold and silver in that concentrate. And importantly, because we take the lead out, the zinc concentrate is incredibly pure, which means it's very attractive to the Chinese smelters and the Chinese buyers. So we are very popular. We get a premium price for our zinc.
Wow, that's fantastic. So that means that you are selling directly into China. You have also China. like short ways to do your selling. And how does that work? Do you get paid like immediately, or first they have to refine?
Absolutely. It's fun. For me as a finance director, it's fantastic. I don't have to worry about credit. What happens, we run an auction both for our zinc and for our lead. the highest bidder gets the concentrate, they have to wire cleared funds into our bank account in China before they come and collect the concentrate. So I don't have any debt problems. I do not have any problems with trying to deliver the product around China. It's so easy, and we get a good price for our product.
Okay, fantastic. And
what's finding quite important actually has been over the past year, we've seen a very dramatic fall in the prices or the deductions the smelters make for their charges on our concentrate. So, you know, we are now receiving, well, we were receiving around about 65 to 70% of the zinc, the market prices for our zinc. We're now getting 75 to 80% of the price. And of course, the price has been going up. So our profitability of late has been sort of increasing. It's been improving rapidly.
Mm-hmm, fantastic. So your concentrates are very clean, no arsenic problem,
very clean.
Or
very
and also no penalty charges.
No, absolutely. Which means that the zinc smelters, particularly, they can then blend our zinc, which is very pure, with some of the poorer quality stuff that they get in China. Mm-hmm. So we have a very, very attractive product.
Okay, super. Can you say already something to, let's say, the 2020 production numbers, maybe also with margins? So are you making good money?
Yes. I was going to say we're in a very fortunate position in so much that, you know, clearly we've all experienced the problems of COVID-19 over the past 18 months. Certainly that issue hit us at the beginning of 2020. So the first quarter of 2020 was a difficult quarter. We had operations suspended for about a month, where basically the Chinese would not let anybody travel around China. The place was certainly closed down. But things have opened up since then. We've managed to mine and process around about 850,000 tons of ore in 2020 for about 33,000 tons of zinc metal and about 15,000 ounces of gold last year. That has enabled us to maintain profitability. I mean, excuse me, one of the issues has been that because we've not been able to travel, we've had difficulty getting some of our expats up to sites. We've all had to work remotely. It has actually kept some of our costs down. So our admin costs have been lower, which means actually our profitability has been much in line in 2020 than what it was in 2019. So it's actually been a good year for us.
Okay, super.
And 2021 looks even better.
Okay, super. That brings me, of course, to the question about future dividends. Because you are debt free, you must not serve any debt, and even if you are now like doubling the production and moving really to, let's say, the next level, I would call it, with the mine, will we see any dividends because you have already started a share buyback program?
Absolutely. But I think what's important to note is that since at the end of last year, and as we move into 2021, we've had a number of successes with what they call PFA approvals, which has allowed us to expansion. We've now got the mining license over Zone 2 and Zone 3, which allows us to expand into that area. We've got Green Mine certification, so we're now looking to expand up to 1.5 million tons of ore per annum in the future. At that level of production, we become a cash cow. Share buybacks, dividends, all become, I'm almost tempted to say, a certainty.
I like to hear that. That is fantastic, because we all love dividends for sure. And this brings me to the question.
Certainly the Europeans all love sort of dividends.
That's right.
I say my American friends prefer share buybacks, but as Europeans, as you know, we do prefer dividends.
Yeah, definitely. That brings me to the question. What are the largest shareholders in the company? What has management shares into that? And I saw in your presentation that we have Adam Ustan, who has 19.2%, and we have a controlling group with 13.1%. Can you maybe give us a bit of an idea or a little bit further rundown who is in there?
Yeah, that's quite interesting. In actual fact, there's probably three major shareholders, as you say. Adam Usdan, who's one of our directors, he's been a long-standing supporter of ours. He's been there since 1997 with us. So he's been a long-standing and good sort of support of us. And he's a director of Griffin Mining. We then have a group under the control of Andrew Goff, who is another American. He's not a director, but clearly he is actually connected with, or I was going to say, he knows Adam Ousden. We then have a third shareholder, a chap called Richard Griffiths, who is based in the UK. Actually, he's based in the Channel Islands, to be correct. He's a major shareholder in London AIM listed companies. Between the three of them, they control around about 50% of the company. There are a few sort of institutions that hold smaller sort of amounts, like the old Hargreaves Hale, which is now part of Canaccord. They probably hold about 3%. Really, the rest is sort of retail holders, generalist funds. It's a broad spread, to be honest with you. So 50% within three, 50% above a broad spread of shareholders.
Okay, super. Then also a question which I received upfront from some viewers at Commodity TV. How does it work in China? Let's say, first of all, with the ownership of your mine. How does it work also to bring out the money of the country you are receiving there? Let's say to do all the payments, further future dividends, etc. How does that work?
Okay, well, certainly we've had no problems getting money out of China in the past. In fact, our experience in the past has been it's more difficult to get money into China than it is to try and get money out of China.
Okay.
We do, the way that it works, certainly we have an 88.8% controlling interest in the local joint venture company within China. To actually getting distributions out, we do have to get the agreement of our Chinese partners. That has been forthcoming. We were able to get some money out at the back end of last year by way of dividends, and that has been paid up to the holding company, which has allowed us to start doing the share buybacks. So we have been able to get money. We've certainly been able to get money out in the past. We get regular service fees out of the past. We are able to pay overseas contractors out of China. All fairly straightforward, no real problems.
Okay, super. Then a question about ESG, which is the big theme these days, of course.
Yes,
so how does it work with you, and as you are long-term operating in China, of course, do you fully comply, let's say, to Western environmental standards, for example? How does it work with Chinese workers and stuff like this? And of course, really the big environmental question.
It's really interesting, actually, because when we first went to China back in 1997, it was pretty basic, shall we say. China it's been the great thing in my life is to watch China, in effect, grow up so that their standards now on safety and in environment are as high as anywhere in the world. Now, all that time when we've been there, we tried to be ahead of the curve. So we've always applied Western standards and tried to be a good local leader, if you like, within these sort of areas. So we're constantly finding the Chinese and the Chinese safety bureaus, environmental bureaus, coming to us to see how things should be done, such that now we find that the environmental controls, the safety regulations are as strict as anywhere else we have seen in the world. But having done all that, we now have this green mine certification, which we basically couldn't operate in China. So we are there. Our safety standards and our environmental standards are as high as they come.
Okay, super. As you are doubling your production, as you said some minutes ago, what is still the mine life of the mine? And I think you have now the permit for Zone 2 and Zone 3, but I saw also Zone 8 in your presentation. Meaning, for how long is your permit now to exploit this, and where do you see the mine life just overall? Just guessing, if you want.
Well, it is actually absolutely extraordinary. When we started this mine back in 2005, we started off with 3 million tons of ore, and it wasn't even in measured. It was just, I think it was in mainly indicated. We are now up to, well, we've been in production now for 16 years, and we've now got over 100 million tons of ore in sort of measured, indicated, and inferred. I mean, that is extraordinary, how we've been able to find more and more ore as we sort of develop this mine. and Up until now, we've just been mining from what we call the Zone 3 area. As you point out, we've now got the license to mine Zone 2. There is as much ore in Zone 2 as there is in Zone 3. So we're now starting to develop the Zone 2 area to bring that into production. There is a Zone 8, which, if I remember rightly, is to the west of the sort of main area. There are other zones. There's one to the north. It's an extraordinary area. There is so much mineralization within that area. We also have a first right of refusal in the exploration license areas or exploration areas surrounding the mine as well. We've got so much to do there. But with the ore that we have alone, let's put it this way, we've drafted a life of mine plan which will see this mine through to 2056.
Wow,
and
2056.
Beyond that.
Jesus Christ, I'm not sure if I am still alive then, but that sounds like a really good game plan.
Honestly, I hope I'm not, but I never know.
That's right. No, super. Okay. Yeah, the final question is, have you discussed so far the dividends already in the board?
Yes, we have. And certainly that is under consideration. And certainly, as I see, we start generating a lot more cash, which should certainly, I mean, one of the things we've got to do this year is we do have to develop the Zone 2 area. So, you know, we do have to sort of make sure cash is available for that. But certainly as we move into next year, and I can't see any significant capital expenditure going forward, very much so, we are certainly discussing dividends.
Mm-hmm. Super. That was a great final sentence. Thank you very much, Roger, for a great interview.
Thank you.
And yeah, again, congratulations to your 25th company anniversary. That's great. I love that.
I never spent so long in one place. It must show I really love it.
Yeah, absolutely. And it fully complies with the mine life, I would say.
Thank you.
Super. Thank you very much. All the best. Happy Easter. And I have a very good feeling that we talk soon. Thank you. Okay. Yeah, ladies and gentlemen, that was Griffin Mining. Yeah, China's almost largest zinc producer, but also lead, silver, and gold, as you heard. And Roger Griffin, Roger Goodwin, of course, the finance director, just gave us a great roundup here on this company. And as you heard it, no debt. Company doubles production. They want to pay a dividend sooner than later. They are doing share buybacks already. And they have a mine life until 2050, 2060, something like that, easily. This is exactly what investor dreams are made of, for a nice investment and hopefully then for a payout in the future here via dividends. And I think you really should have a close look onto this fantastic company. Thanks for watching us. Happy Easter and bye-bye from Switzerland.